All right, boys, we absolutely destroyed longs today. NASDAQ or NQ. Well, we trade on NQ, we chart on NASDAQ, but destroyed these longs 2-to-1 RR. Beautiful long setup on Powell day. People hate Powell, but I personally love Powell. He makes me the bread. So now let's go over what we saw for today. All right, I'll open up like an empty chart. They updated the screen. I'll open up an empty chart. We'll go over it right now. So, we trade the order block strat, the Auropreneur order block strat, order block. So look at that, clear uptrend, bullish as ever. Okay, the high time frames, of course, they're gonna be bullish. If that 4-hour time frame looks like that, 4-hour bullish, 1 hour also bullish. Well, actually, let's see. Going into market, Wednesday. Okay, going into market, we were bullish because look at that uptrend, closed above these highs and didn't close below any lows prior to that or after that, I mean. So we're bullish on the hourly as well. And what order blocks do we have near the hourly? Oops, sorry, getting a phone call. We have this order block. So an order block, if you guys don't know what that is pretty much the move that causes a liquidity sweep. Oh, great, my camera's bugging out. The move that causes a liquidity sweep and then a break of structure, like following that. It doesn't have to be right after the candle after of the liquidity sweep, but it can be at any point after. It just has to have a break of structure after that. I hope my camera wasn't like frozen the whole time. But anyways, let's move on. So order block over here. I also pay attention to retracement order blocks, which are opposite candles of the trend. So we're gonna play bullish because our 4-hour and 1-hour bullish. We're gonna play with the trend. That's how the strategy works. We play with the trend and we catch moves that retrace into the order blocks and ride the continuation. We ride that next leg up. So pretty much if we have like an uptrend like this, we get drawing uptrend like this, retracement order block right here, right, like we marked, boom, enter in here, go into lower time frame, whatever, catch like a break of structure and like a few other confluences, ride the wave up for the next leg up, boom. That's how we take our plays. All right, why do I sound like a robot? All right, come on. So now after that, not only do I look for order blocks, I also look for fair value gaps within the order blocks to be respected prior to looking for lower time frame entries. So now, okay, let's scale. Now we scale into the lower time frame. So this is 6 o'clock. I just have these gray zones to mark out the 6 o'clock. And the fair value gaps have to be either 5-minute, 15-minute, or 1 hour. So I was looking at this over here. Bro, why did I place a line? So I was looking at this over here. Is this the play we got? No, because Powell speaking at 7 o'clock. We waited till Powell spoke and then took our trade because we don't want to trade before Powell, and Powell starts speaking and fucking volatility eats our ass and trade goes against us. So yeah, we had this. I'm just gonna mark this out. I don't think this is the one I took it off of. This is a 15-minute fair value gap, and we have this one as well, bruh. 15-minute. We also had this hourly one that was like pretty important, overlapping the 15-minute. This hourly one as well. This, yeah, this was the move we caught after 8 o'clock. The play happened at like 8:15, 8 o'clock, whatever. So that 1 hour time frame, 1 hour is like kind of riskier because the candle can go all the way down here. You get an entry like pretty like in between here, and the hourly is still like below it, but it's still respecting because the candle hasn't closed yet. So the hourly is a little bit scarier. I like to play 15 and 5-minute, but I noticed even with hourly fair value gaps, so if we have those in place and no 15 or 5-minute, the order block move still works. So I just decided to include hourly fair value gaps within the strat. So since the 1 hour and 4 hour bullish, we scale down to the 1 minute time frame. So we wait till 7 o'clock, right, to get our entry. 7 o'clock, because 7 o'clock is when Powell starts speaking. So right here, after 7. After this point is when we wanted to look for possible entries. Okay, we need price to drop down into our order blocks, either retracement or order block, and catch an entry. And I'll go over how we find entries like after. Okay, so we tap into here, no break of structure. I look for a break of structure after we tap into our order block. A break of structure is the change in the structure of the market. So if we're in a downtrend, we turn to an uptrend. Uptrend turn to downtrend. See, we're in a downtrend, right? We go down, we go up, we go down, we go up, we go down, we go up, we go down, and break that uptrend with this move right there. See, we formed a high over here, a green and a black candle. That forms a high because we move up on one candle, down another candle. That's a high, right? We broke it with this candle right here. With this candle. Wait, hold on. Am I reading this wrong? Hold on, give me a sec. Let me look at the other trade. Oh yeah, we didn't break it on that candle. Oops. So yeah, what am I saying, bro? I'm literally bugging out. Camera comes on, I'm bugging out, bro. Forgive me for my mistakes. But yeah, we didn't break over here. See the high? Didn't take it out. Even though we closed really close to it, that still doesn't count as a break. We need a candle close above it. Not on it, above it. Okay? Can be the same equal level, still doesn't count. That's how I tested it. You need to be so precise with how you draw things in order to have an actual system. You can't have any subjectivity like that. So didn't break that. This candle opened up here, but still closed down here. If it closed anywhere above this, even if it was a bearish candle, that would have counted, but it didn't. Then now we have a new recent high right here, green and black candle. We need to close above this for me to consider the break of structure. We closed above it with this, and then I don't enter yet. I look for a breaker block entry. Now a breaker block is essentially a failed order block. Okay. We just grab that last move. Here, I'll go more in depth in another video. So if you still don't get it, just bear with me. It's similar to an order block. Just think of it almost like an order block. So we mark the breaker block. Essentially, we want price to come tap back into it and then give us a reaction candle out. Doesn't have to look exactly like dipping into it fully. You just see a candle to touch it. We can wick into it, whatever. Touch it. The next candle after the breaker structure can be the candle that touches it as well and gives us the entry. And that's what happened. We tapped into our breaker block after the break of structure, which was with this green candle at 8:11, the close of that candle. And we had a reaction. We had a tap back into the breaker block and a reaction out. Boom. Enter right there. Stops below the lows, 1 point below the most recent low on that time frame that you broke structure. So we broke structure on the 1 minute time frame. We put our stops below 1 point below the most recent low. So that was 13.3 right here. We put it to 14.3. Bang. Just like that. Then we have a 1-to-1 there already set for me. Perfect. 1-to-1 right there. We set a 2-to-1 right there as well. Just gonna do that. Bang. 1-to-1 TP, 2-to-1 TP. Now you can see. Perfect. After we went into drawdown a little bit scary, but we're not full of emotions. We don't cry and exit our trade if it doesn't go to our stop loss or if it doesn't go to our TP. We follow our plan. So price dipped into the drawdown, okay, hesitated a little bit, but surely we jumped back into. Powell is still speaking at this time, by the way. I don't know how long he spoke, but I got off after I hit my TP, but he's speaking for a good amount of time. A lot of people are asking him questions. We watch it live in the Discord, by the way. So if you're not in that, quick little plug, it's free. So whatever, just join up, ask questions, hang out, bro. We're all traders, but we're all reaching financial freedom. I want to help you guys out. We all had the same goal. We all have the same goal still. I haven't reached financial freedom yet, but we're all going there. We're all gonna make it big. Just join up, help each other out, support each other. This is a lonely path, bro. If you're by yourself, like, I mean, if I was by myself for the first year, and bro, that shit was hell. I wish I had someone like there to talk to and like whatever. Okay, let's go back to the trade. Go back to the trade. Whatever. So 14.3 points stop loss, 1-to-1, 2-to-1. Straight green candles after he exited out of drawdown to our 2-to-1 TP. I mark out 1-to-1 because this is where I move my stop loss to break even. So if the trade goes 1-to-1 in profit, stops go to break even. I haven't exited the trade. It's just the stops move to break even. Now the trade is risk free. It can either end up making nothing and losing nothing, or I make my 2-to-1 RR. This is because as for my testing, I just found out this is what works. Gives me the best, highest probability trades, plus makes the most return from all the different methods I tested. But now we go 2-to-1, exit fully right here, 2-to-1 trade, and it's pretty much it. Is there anything else to go over? Yeah, we don't worry about what happens in the trade. The only thing I'm currently testing and paying attention to is choppiness happening during the trade and choppiness before the trade. Whether, because a few times in the past few months I've noticed the trades can start chopping up pretty bad in the middle of the trade. Like they almost start looking like this. Like imagine you're in here, and maybe 5 minutes will look like more choppy, but they can almost look like this. Like imagine we got in, for example, here. Like trades start chopping, but a lot longer, like probably for like 30 minutes, whether to like just exit, because sometimes it ends up hitting like our first 120p and then break even, and hardly ever it goes to 2-to-1 unless volatility just picks up. Oh, my camera froze again. Oh, we're back. Or it just hits drawdown. From what I've noticed, it hits drawdown most of the time. So I'm kind of trying to implement a rule where if choppiness occurs before or during the trade, I haven't fully tested which one or both is effective. I'm still doing that with the back testing, but it isn't much to affect the profitability of my system. So I'm not too worried about it yet. It's just something I'm making, or like keeping track of on. Why does my camera keep freezing? Keeping track of on the side, because I want to optimize my system. We all want to optimize our systems to our market conditions and what we notice. Not changing in every trade on a single trade to trade basis, but over multiple trades, over multiple weeks, months, analyzing our data. Data is everything. Data collection is key. Actually, I might even make a YouTube video about data collection now that I just thought about it. Like, there's so much to talk about backtesting. Not a lot of traders talk about backtesting, like detailed data collection and analysis. I know of a few traders on social media that talk about it, but no one goes in depth about how to do it. Unless you buy their like course or whatever, or their community, then they'll go deep into it, or like their mentorship or whatever. But data collection is the most important thing. Without data, you're blindly trading. Unless you're a discretionary trader, but even if you're a discretionary trader, you have a system or various systems that you know ends up working out for you, and you adjust due to market conditions. I personally don't really know how discretionary traders are able to make it work. I don't have the mindset of being a profitable discretionary trader, so I just stick to mechanical trading. That just works in my mind. I like data. I'm a computer science student in college. I like math. I like statistics. I like data. I like dealing with data on a mathematical basis, or on a mathematical level, computational level. So yeah, just Notion spreadsheet or Excel, whatever you want, Google Sheets, pop it up, build the system for yourself, keep track of the data, backtest it across the current market, like 6 months to 2 years, ideally, so you can have a broad view of different market conditions and how your trading system works across those multiple market conditions. But yeah, now we got out of the trade recap. We just dropped like some sauce at the end of the video, but yeah, that was it for the trade recap. Maybe I'll make a video about different aspects of my strategy and data collection. But if you guys really want to see videos about how to actually properly data collect, or me explaining my strategy and how to actually build a profitable trading system, and let me know down in the comments. And with that, I'll see you guys tomorrow. Join the Discord, by the way. Watch me live every single day if you're not in already. And yeah, I'll see you guys in the Discord or on the next recap if you guys are there.